Hey guys, this is Julie with J Auto Trading Strategies, and I want to talk today about that first pullback and how we can identify it and make a trade execution off of it. As always, we first want to have a general idea of where the market could be going directionally, and that is in a flow. So we want to take a look at a channel and get into a flow in the direction of the overall trend, and especially if it's moving in correlation or in confluence with that prior close direction. So if the prior close is above you, you want to be going short, and if it's below you, you want to be going long. So and if we get a range breakout, locational based trade, even better, because price could be moving directionally even faster in that direction. So let's take a look at some of the pullbacks and using the shark indicators BloodHound strategy to create these custom trading ideas and execute them in Blackbird. As always, a risk disclosure. Um, Risk capital should only be used for trading, and sim trade any strategy before using it, and these webinars are for educational purposes. Hypothetical performance disclaimer, the charts that we're going to look at today occurred last week. Today is Saturday, the markets are closed. It is 11:11 Semper Fi, and let's take a look at the charts. Hang on one second. All right, so the NQ has been all over the map, down and up. On the 9th, we started out down and then went up, and then have sort of flattened out. Am I past the 9th? Yep. There we go. All right, it starts out down early on in the session, and the Globex opened. And so you can really tell when a market is trading directionally. Say it's moving all red on your direction guide. So you really want to be paying attention to when price turns around and starts moving down. And a good way to time an entry into the market is at these standard deviation levels from either a Keltner channel or a moving average, or both, or all three, and try to execute trades when they touch these levels. And I've even added another level that's pretty good, and that you can get some trade executions on those touches as a general idea of entry locations for entering on pullbacks. Keep in mind that people like to trail these pullbacks, and that is a good way to trail the prior little pullback high or low. But pay attention that market makers will knock you out a lot of the times. And so a stop outside that other band really keeps you able to take a little bit more profits, but they also will spike it to clear out stops resting behind it. So take a risk approach when you're trading. A lot of people will keep the risk behind like a moving average and just exit trades, capturing profits at that point if it's reached or something, whatever your trade plan is. But I prefer, instead of exiting there, I prefer entering in that direction on those locations whenever possible, especially at the beginning of the move. So at the beginning of the move, whatever impulse move that you have set up looking at the market, um, try to wait for those pullbacks at that time on the first few and try to capture entries. And then when the market flipped, and the same thing, look at this, it went down. So you had a great opportunities, entries right off the bat, re-entry, came back for a little stop run, and then again take off. Here's the re-entry, and then it turned around pretty quick, flattened out. Here's your M2 bar down on a location. Great setup. Here's that first pullback. Awesome. And that's a good entry. First pullbacks. And you get the idea. And so we can get signals off of anything that we can allow to touch that pullback area. So the closer that you can get, or the further away turnaround point is ideal. And so we can use BloodHound to enter. And take directional trades with much lower risk, because you're not risking the entire bar, you're only risking the tail end of it. So it's a tail risk and a larger profit potential. And as long as you can keep the risk consistent throughout, you can increase the potential to maximize that strategy. So a consistent amount each time. So always have your risk box on your entry before triggering the entry. Know where those levels are. Up or down. And that's something that I like, because Blackbird or Raven both would allow you to employ a strategy like this. So pretty easy. Again, here's your double play entry. Try to get pullback. Boy, it just took off. Here's your first pullback. Here's a mini pullback. So good locations to try to get an execution off of those locations. Okay, so just leave yourself enough risk. This is a 25-cent bar. It gets better as you can increase this. Just, for instance, whatever range you choose, it's going to be the same thing, but with a larger risk. And so you can see why it's so hard to damn trade. But so when you can identify a outlier on a larger risk, level, that's the time to enter. Right here is a good entry. But I don't like trading with that much risk, so I will adjust my chart to whatever the market's doing and try to just approximate it on an easy level to get, enough trade executions on. So that's it for today. It helps to have a game plan directionally, but it also helps to have an idea of where you're going to approach the market for an entry in that direction. And it doesn't have to be just price hitting a moving average. You can use any other technique that you like. All right, thank you so much. Y'all have a great weekend.